come back once again to the big stock market story, because this is where, especially after the crash in real estate, a lot of people moved their money online into the stock markets, and for a long while it was felt that here is a reasonably safe avenue because people were getting assured high quality returns, and suddenly we're seeing complete mayhem in the markets. Radhika Gupta joins me. She runs Edelweiss. Abhay joins me. He is with Motilal Oswal. So welcome to both of you. I want to go across Radhika first. Radhika, you know, people who are watching and those who don't track the stock markets as closely as the people you ordinarily would be speaking to are petrified. They're wondering, as they see this crash every morning going up till the afternoon, where do you think this is going to end?
So I think, of course, these are unprecedented times for the stock market. These are unprecedented times for the world itself. I just want to tell people who've invested in the stock market for the first time that what you're seeing is difficult, but it's also something that we've seen before. I recall starting my career in 2008, and Rahul, shortly after that, markets were down 50%. They were down 20-30% in 2011. So what you're seeing is definitely difficult economic times, difficult. We are fighting a pandemic globally. But remember, this is not the first time markets have fallen. And it is very difficult to say when we will come out of it. It is very difficult for the average investor to jump in and see his portfolio down 30% this month, which it is. But the worst thing an investor can do at this point, honestly, is panic and press the panic button. And my one advice to all investors would be just don't go out and do that.
Aashish Sommaiyaa, I was reading that we haven't seen mass redemptions. With the market taking the kind of hit that it is, I would have ordinarily imagined that small retail investors would panic and start ending their SIPs, start pressing the panic button, calling for redemptions. That somehow on a large scale isn't happening. Are you of the view that people are now more mature, they've seen stock market cycles and therefore they think they can ride this out? Why is it that we're seeing foreign portfolio investors pull their money out, but at the retail level, do you think people are reasonably calm at this moment?
Yeah, you know, the beauty about the Indian market and our demography is that every 5 years, every 10 years, there's a new cohort of youngsters who's entering the work stream and hence entering the investor stream itself. And I can say, like Radhika mentioned, you know, we've seen this in the early 2000s, we've seen this in 2008, and I'm seeing it now again in 2020. And this time there's a marked difference in the way investors are handling this whole situation. In fact, more often than not, I get queries. Definitely existing investors are concerned, but at the same time, I get equal number of queries from investors, as in, is this the bottom and should we kind of try to invest again? There's a marked difference in the behavior of investors, what it used to be 10 years, 20 years back versus what it is now. And it is especially remarkable considering, Rahul, that it's not only March 2020 that we are speaking about. In fact, you leave aside a few large caps. The fact is that right from 2018 January, 2018 was not a great year. 2019 was not a great year. And now this is maybe more than 2 years where we are seeing the market going nowhere. And on back of it now in the month of March, there is a sharp decline. And we are still seeing investors consistently investing. So yes, there is a process of maturing. And my sense is that Indian investors' holding of Indian equities is going to be rising. And I think there's nothing bad about it. I mean, it's a good thing to happen.
Radhika, there have been demands in India and elsewhere, shut the markets down till the mayhem continues, till you can get a grip on where this crisis ends. Don't just wake up every morning and see the market tank by about 2,500. Is this just, you know, vitriol? Is this just panic reactions? Or do you believe if there can be a concerted global movement from the Nikkei, from the New York Stock Exchange, all markets coming together and saying, okay, till we get a grip on this, let's try and shut the stock markets down? Is that at all conceivable? Does that make sense?
You know, there are two parts to this. You know, as markets professionals, Rahul, we are also essential services. And, you know, till the markets are open, many people do come to work. It's not only the portfolio cost, it's the human cost of having so many people come to work. But I was just checking through the history of everything that the world has gone through. And, you know, we've seen world wars, we've seen World War I, we've seen World War II. You don't have periods globally where the markets are shut down for extended periods. It could happen around 9/11 or 26/11 for 1 or 2 days, but it does not happen for extended periods. also do realize that it's not just the Indian market. Indian markets today are very well connected and all global markets are interlinked. So we are linked to what happens in the US and we're linked to what happens in the UK. So you really can't shut markets down. In fact, about a week or two ago, Philippines attempted to shut the market down and they realized after 2 days of chaos that it probably wasn't the wisest idea. And then they went back to reopening markets. It's very nice to say markets will shut down and I won't see that 30% lead on my portfolio. But remember, if markets shut down, for instance, mutual funds like the one Aashish and I run will not be able to give you your money back on a daily basis. So we take for granted that markets are open sometimes, but with markets remaining open, a lot of other essential things happen. So in my view, despite the fact that many of us do have to come to work every day, and it is painful to see portfolios just because of the global linkages and because of the past precedent, it is hard and probably not a great idea to go shut markets down.
The other thing, Aashish Sommaiyaa, that a lot of people are toying with is that, okay, I missed the rally on the way up to 40,000. Is this a good time for me to come in? But you don't know where the pit ends. So what's the suggestion that you have to people who are watching, getting slightly twitchy and possibly adventurous and saying, is this a good time to venture in?
Oh, there's no way to call the bottom. There's no way to call the bottom. I can assure you that any price that you get in, from that level, the market has its own way of irritating you and getting you 5%, 7% lower than that. I think that if you are somebody who is holding liquidity, then maybe in the next 2 to 3 months, you should try to get deployed fully. Let me also tell you that what is happening right now, I don't mean to make light of this situation, but let me tell you one thing. Whether the virus is being fought effectively or not, I think that is something which everybody can debate. But in the background, the US government, the US Fed, and all governments, whether it's Europe or any of the markets, they are very, very well prepared this time to handle the economic fallout of the virus. I mean, some people may criticize that they are so focused on the economy that they are preparing to handle that part more than trying to handle the health hazard. Because if you remember in 2008, when the financial crisis happened, it took Europe almost 9 months to come with quantitative easing. It took US another 3-4 months or 6 months to get out of the political quagmire and get through with their easing in the economy. But this time around, even as they fight the virus, they've already started fighting the economic fallout. So let me tell you, I don't mean to make light of the situation, but the day there is a sense that the rate at which the virus is spreading is kind of coming under control, there is a good chance that the stock market might, I'm not talking about the economy, I'm only talking about the market reaction. There is a good chance that the market might actually, find its feet very, very, very swiftly actually.
Just one very quick final question. Did either of you preempt this with all the sophisticated tools and modeling that you do? Were you able to pull out your money and your clients' money in time, or like everyone else watching, you've been bleeding as well? Radhika, 30 seconds.
Our funds are equity funds and our mandate is to invest 100% in the stock market, and we do that in the funds. There are other funds where we invest partially in the markets, and I think there we've done reasonably well. But for equity funds, our job is to invest in the markets, and that's what we've done, and we'll continue to do it to the best of our ability.
I will say no, I didn't know this was going to happen,
okay,
but I'll also tell everybody watching us that, there is a high chance that you will invest a lot more in the future than what you have invested in the past. So don't worry about prices coming down right now. It's a good opportunity.
But that's very reassuring. If two of the sharpest whizzes on the markets thing that they tanked as well, just as everyone else did, that's good. So everyone's in this together. You sail together, you sing together. Radhika and Aashish for joining me on the Newstrack tonight. Thank you very much. Hello everyone, this is Rahul Kanwal here. Hope you enjoyed this video. For the latest news and analysis, like and subscribe the India Today YouTube channel, and don't forget to press the bell icon to stay updated.